The purpose of this learning module is to provide an overview of the National Flood Insurance Program with an emphasis on flood insurance. The NFIP was established by Congress in 1968 and since then has been modified, most recently in 2012 through the Biggert-Waters Act. Simply stated, the National Flood Insurance Program, or NFIP, is a federal program enabling property owners in participating communities to purchase flood insurance protection against losses from flooding. Participation is based on an agreement between the local community and the federal government. However, there are many programs and tools available through the NFIP to assist other federal agencies, states, and communities with mitigating flood losses. Congress created the NFIP in 1968 to change the national response to flood disasters. Historically, flood mitigation was limited to constructing dams, levees, and flood walls, and providing disaster relief to flood victims. However, this approach did not work and may have encouraged inappropriate development. Also, private insurance companies were unable to provide affordable insurance coverage. The purpose of the NFIP is to assist property owners to reduce potential losses from flooding. As mentioned earlier, Congress enacted the NFIP in 1968. Since then, the NFIP was broadened and modified with the passage of the Flood Disaster Protection Act of 1973 and other legislative measures. It was further modified by the National Flood Insurance Reform Act of 1994 and the Flood Insurance Reform Act of 2004. The most recent modifications to the NFIP were enacted in the Biggert-Waters Act of 2012. Participation in the NFIP is completely voluntary. A community's participation status can affect property owners in the special flood hazard area. The image on the slide illustrates an example of the Community Status Book Report, which provides information regarding community participation in the NFIP. For more information regarding community participation in the NFIP, please visit the website at the link shown on the slide. Benefits of the National Flood Insurance Program for participating communities include the ability for property owners to insure against flood losses, improved floodplain management, which results in reduced risks of loss of life and property damage or loss, improved management of development in the floodplains results in reduced monetary losses, and the community generally has the following: a flood insurance rate map and a flood insurance study. There are two programs pursuant to the National Flood Insurance Program. The emergency program is the initial phase of a community's participation in the NFIP and was designed to provide a limited amount of flood insurance. A community participating in the emergency program either does not have an identified and mapped flood hazard or has been provided with a flood hazard boundary map, and the community is required to adopt limited floodplain management standards to control future use of its floodplains. Less than 3% of more than 21,000 communities participating in the National Flood Insurance Program remain in the emergency program. A community participating in the regular program in the NFIP is usually provided with a firm and a detailed engineering study termed a flood insurance study. NFIP probation is a FEMA-imposed change in a community's status resulting from violations and deficiencies in the administration and enforcement of the NFIP local floodplain management regulations. A community can be placed on probation 90 days after FEMA provides written notice to community officials of specific deficiencies. The probation is generally enforced after FEMA has communicated with the community and has not been able to resolve the deficiencies. It may last for up to 1 year after the community corrects all the deficiencies and remedies all violations to the maximum extent possible. A surcharge is added to the premium for each policy sold or renewed in the community and is effective for at least 1 year after the community probation period begins. Suspension from the National Flood Insurance Program can occur if a community fails to adopt an adequate ordinance or a failure to adopt the most recent flood insurance rate maps. Consequences include the policies cannot be purchased or renewed, policies in force at the time of suspension continue in force for the policy terms, and there's a 30-day time period when the community can show cause why it should not be suspended. As a part of the National Flood Insurance Program, FEMA identifies flood hazard areas throughout the United States and its territories. These areas are generally identified on a flood insurance rate map. This is a high-risk area defined as any land that would be inundated by a flood having a 1% chance occurring in a given year. NFIP flood insurance coverage is available only in participating communities. Almost all of the nation's communities with serious flooding potential have joined the NFIP. The inventory of flood insurance rate maps and flood insurance studies are located at msc.fema.gov. If a lending institution is requiring the insurance to meet mandatory flood insurance purchase requirements, the property owners may not contest the requirement if the lending institution has established the requirements as a part of its own standard lending practices. However, if a lending institution is requiring the insurance to meet mandatory flood insurance purchase requirements, the property owner and lender may jointly request that FEMA review the lending institution's determination. This request must be submitted within 45 days of the date the lending institution notified the property owner that a building or manufactured home is in the special flood hazard area and flood insurance is required. In response, FEMA will issue a Letter of Determination Review, or LODR. The LODR process should be used as a last resort. Before the LODR process is engaged, the property owners should contact their lender and provide them with additional documentation to support their position. Some lenders reserve the right in their loan documents to require the purchase of flood insurance, regardless of the flood zone. Property owners may not contest the requirement to purchase flood insurance if the lending institution has established the requirement as part of its own standard lending practice. NFIP coverage is available to all owners of eligible property located in a community participating in the NFIP. Confirmation of community participation can be found at the link shown. Owners and renters may insure their property against flood loss. Owners of buildings may insure during construction. Condominium associations and owners of residential condominiums may buy flood insurance pursuant to the Residential Condominium Building Association policy. The unit owner may insure personal contents and additional building coverage pursuant to the dwelling form. The owner of a non-residential condominium can only purchase flood insurance for the contents. Pursuant to the Flood Disaster Protection Act of 1973 and the National Flood Insurance Reform Act of 1994, buildings in the special flood hazard area are required to have flood insurance when the mortgage lender is a federally regulated, supervised, or insured financial institution for the acquisition or improvement of land, facilities, or structures. The lender reviews the flood insurance rate map to determine whether the structure is in the special flood hazard area and completes the standard flood hazard determination form. Some insurance companies may require insurance outside of the special flood hazard area as part of their risk management practices. The lender reviews the current National Flood Insurance Program maps for the community in which the property is located to determine its location relative to the published special flood hazard area and completes the standard flood hazard determination form. A similar review and notification are completed whenever a loan is sold on the secondary loan market or perhaps when the lender completes a routine review of its mortgage portfolio. The figure on this slide illustrates the availability of flood insurance to property owners. A building is eligible for flood insurance coverage if it has 2 or more rigid outside walls and a fully secured roof that is affixed to the permanent site. Buildings must resist flotation, collapse, lateral movement, and be in a community that participates in the National Flood Insurance programs. This means that manufactured homes can be insured if they are affixed and anchored to a permanent foundation. Uninsurable properties include buildings entirely over water, buildings principally underground, gas and liquid storage tanks, animals, birds, fish, and livestock, aircraft, wharves and piers, bulkheads, growing crops and shrubbery, land and roads, machinery or equipment in the open, and most motor vehicles. Flood insurance does not cover damage caused by moisture, mildew, or mold that could have been avoided by the property owner, currency, precious metals, and valuable papers such as stock certificates, property and belongings outside of an insured building such as trees, plants, wells, septic systems, walks, decks, patios, fences, seawalls, hot tubs or swimming pools, living expenses such as temporary housing, financial losses caused by business interruption or loss of use of insured property, and most self-propelled vehicles such as cars, including their parts. Sewer backup insurance is not the same as flood insurance. The NFIP does not cover damage in basements from sewers or drains. There's little coverage from the NFIP for basements. Washers, dryers, and food freezers are the only personal property items that are covered in the basement. To go about purchasing flood insurance, identify a licensed property insurance agent in good standing in the state which the agent is licensed or through an agent representing a write-your-own company. The agent will identify the flood zone that the structure is located, complete the flood insurance application, obtain the required supporting documentation such as an elevation certificate and photos, determine the rates for the flood insurance premium, submit the completed application, supporting documentation, and full premium to the insurer. There is a 30-day waiting period for flood coverage to go into effect. The effective date is 12:01 a.m. local time on the 30th calendar day after the application date and presentment of premium. There are exceptions. Whether a loan is conventional or otherwise, flood insurance that is initially purchased in connection with the making, increasing, extending, or renewal of a loan shall be effective at the time of loan closing, provided that the policy is applied for and the presentment of premium is made at the time of or prior to loan closing. In connection with lender requirement, the 30-day waiting period does not apply when flood insurance is required as a result of a lender determining that a loan on a building in a special flood hazard area that does not have flood insurance coverage should be protected by flood insurance. The coverage is effective upon the completion of an application and presentment of payment of premium. Presentment of payment is the date of the check or credit card payment by the applicant or the applicant's representative if the premium payment is not part of closing. The date of closing if the premium payment is a part of the loan closing. An additional situation in which the 30-day waiting period is waived is when the initial purchase of the flood insurance is in connection with the revision or updating of the flood hazard boundary map or flood insurance rate map. During the 13-month period beginning on the effective date of the map revision, the effective date of a new policy shall be 12:01 a.m. local time following the day after the application date and the presentment of premium. This rule applies only when the flood hazard boundary map or flood insurance rate map is revised to show the building to be in a special flood hazard area when it had not been previously. Factors that will be considered when calculating flood insurance premiums include the amount of coverage, the deductible amount selected, flood zone, location, age of building, building occupancy, design of the building such as its foundation type. For buildings built in special flood hazard areas after the community entered the National Flood Insurance Program, known as post-FIRM, the elevation of the building in relation to the base flood elevation is also a consideration for calculating the premium. There are no minimum insurance requirements for a voluntary policy. If coverage is being purchased due to lender requirements, the amount of the insurance required must be at least equal to the lesser of the outstanding principal balance on the loan, the maximum amount available under the National Flood Insurance Program, or the total insurable value of the property. Some lenders reserve the right, as a clause in their loan documentation, to require the purchase of flood insurance above the amount required by law. They may require the amount of coverage to be as high as the building's replacement value. After a major flooding disaster, communities and individuals consider options to reduce their risks. Mitigation projects play a role in reducing these risks and should be considered on a case-by-case basis. In the event of a major disaster, policyholders should be aware of these opportunities. The Hazard Mitigation Grant Program, or HMGP, is the primary mitigation program through FEMA to assist states and communities in implementing hazard mitigation actions following a major disaster declaration. In addition, Section 406 of the Stafford Act provides opportunities where mitigation measures may be funded in conjunction with the repair of disaster-damaged facilities. States manage the program and may define additional requirements beyond the federal standards. The National Flood Insurance Reform Act of 1994 requires individuals in special flood hazard areas who receive disaster assistance after September 23, 1994, for flood disaster losses to real or personal property to purchase and maintain flood insurance coverage for as long as they live in the dwelling. If a home or business is damaged by a flood, the owner may be required to meet certain building requirements in the community to reduce future flood damage prior to rebuilding or repairing the structures. To help cover the costs of meeting those requirements, the National Flood Insurance Program, or NFIP, includes increased cost of compliance (ICC) coverage for all new and renewed standard flood insurance policies. Flood insurance policyholders in high-risk areas may receive up to $30,000 to help pay the costs to bring their home or business into compliance with their community's floodplain management ordinance. Additional information on increased cost of compliance coverage may be found at the link shown on the slide. There are 4 options you can take to comply with your community's floodplain management ordinance and help you reduce future flood damage. You may decide which of these options is best for you. Elevation raises your home or business to or above the flood elevation level adopted by your community. Relocation moves your home or business out of harm's way. Demolition tears down and removes flood-damaged buildings. And the floodproofing option is available primarily for non-residential buildings. It involves making a building watertight through a combination of adjustments or additions of features to the building that reduce the potential for flood damage. If the community determines that the home or business is damaged by flood to the point that repairs will cost 50% or more of the building's pre-damage market value, this is called substantial damage. If the community has a repetitive loss provision in its floodplain management ordinance and determines that the home or business was damaged by a flood 2 times in the past 10 years, where the cost of repairing the flood damage on the average equaled or exceeded 25% of its market value at the time of each flood, this is called repetitive damage. Additionally, there must have been flood insurance claim payments for each of the 2 flood losses. An ICC claim is adjusted separately from the flood damage claim filed under the standard flood insurance policy. An ICC claim can be filed if your community determines that the home or business has been substantially damaged or repetitively damaged by a flood. This determination is made upon application for a building permit to begin repairing the home or business. If the community does determine that the home or business is substantially or repetitively damaged, a local official will explain the floodplain management ordinance provisions that must be met. Consultation with the local official is recommended before the final decision about which of the options to pursue. Once the community has made this determination, contact the insurance company or agent who wrote the flood policy and file an ICC claim. In 2012, Congress passed the Biggert-Waters Flood Insurance Reform Act, which required FEMA and other agencies to implement changes to the NFIP. Some of the changes have already started and others will be implemented in the coming months. Provisions of this legislation will require the NFIP to raise flood insurance rates to represent the true flood risk in a given area. This will enable the NFIP to be more financially stable and sustaining. Some, but not all, policyholders will see rate increases. Artificially low rates will be eliminated. Property owners should contact their flood insurance agent to better understand how these changes might impact their policy and property. Some of the changes are that subsidized rates for non-primary or secondary residences are being phased out. There are several actions that can trigger a rate change. It's important to note that not everyone will be affected. Owners of subsidized policies on non-primary or secondary residences in a special flood hazard area will see a 25% increase annually until rates reflect the true risk. This began in January of 2013. Owners of subsidized policies on property that have experienced severe or repetitive flooding will see a 25% rate increase annually until rates reflect true risk beginning October 2013. Owners of subsidized policies on businesses or non-residential properties in the special flood hazard area will see a 25% rate increase annually until rates reflect true risk, also beginning October 2013. Primary residences in the special flood hazard area will be able to maintain their subsidized rates unless or until the property is sold, the policy lapses, severe repeated flood losses occur, or a new policy is purchased. The Biggert-Waters Act phases out grandfathered rates and moves to risk-based rates for most properties when a community adopts a new flood insurance rate map. The new rates will happen gradually, with rates increasing 20% per year for 5 years. As initial flood risk identified by the National Flood Insurance Program has been updated over the years, many homes and businesses that were built in compliance with existing practices received discounted rates in areas where the flood risk was revised. The grandfathering approach prevented rate increases for existing properties when flood risk in their areas increased. Since the implementation of the National Flood Insurance Program in 1968, flood risks continue and the costs and consequences of flooding continue to increase dramatically. In order to maintain sustainability for the National Flood Insurance Program, Congress made several modifications, including eliminating the artificially low rates through the grandfathering provision. The Act phases out grandfathered rates and moves to risk-based rates for most properties when the community adopts a new firm. This increase will happen gradually, with new rates increasing 20% per year for 5 years. Steps that can be taken to lower costs by homeowners, business owners, and local officials include: homeowners and business owners should discuss insurance options with your agent. An elevation certificate will probably be required to determine the correct rate. Higher deductibles may lower your premium. Consider incorporating mitigation into remodeling or rebuilding. Building or rebuilding higher may reduce your risk. Consider adding vents to your foundation or using breakaway walls. Local officials can consider participating in the community rating system or increasing CRS activities to lower premiums for citizens. Also, local officials can discuss grant opportunities with state officials. FEMA issues grants to states, including Kentucky, which can distribute the funds to communities. Some communities want to achieve a higher level of safety and protection for their citizens than achieved through implementing minimum standards. When these communities join the NFIP's Community Rating System, or CRS, their policyholders may receive a discount on flood insurance premiums. The CRS recognizes communities for their additional efforts to 1. Reduce flood damage to insurable property, 2. Strengthen and support the insurance aspects of the National Flood Insurance Program, and 3. Encourage a comprehensive approach to floodplain management. Communities that join the CRS receive a rating according to a point system devised to reflect the level of safety provided through the floodplain management activities they implement. CRS communities are assigned a CRS class from 9 to 1 that establishes the level of premium discount policyholders receive. Policyholders in a CRS Class 9 community receive the lowest discount of 5%. The highest discount of 45% is provided in a CRS Class 1 community and requires the most points. This discount applies to policies for properties located in the special flood hazard area that qualify. Properties located outside the special flood hazard area receive smaller discounts. For more information regarding the CRS program, please visit the CRS Learning Module or the FEMA CRS website. Some facts about flood insurance. One building and its contents are insured on one policy. The dwelling form provides coverage for up to 10% of the policy amount for appurtenant garages. Flood insurance is available for a 1-year term, and the average flood insurance policy costs about $600 per year. In order to prepare yourself before a flood, you should protect your property. Document all of your personal property and keep it in a safe place, such as a safety deposit box or a waterproof safe. The document should contain a copy of your insurance policy with your agent's contact information, a document of the inventory of the possessions in your house, both written documentation and visual, such as videotaped or photographed proof of all major household contents and valuables. This must include items stored in basements, attics, and garages. Document serial numbers and store receipts for major appliances and electronics. Jewelry and artwork should be appraised. Copies of other critical documents such as wills and financial records should also be kept in a safe place. You should also prepare your house. Check your sump pump and have battery-operated backup power. Clear debris from gutters and downspouts. Anchor fuel tanks, raise electrical components, and raise your furnace, water heater, washer, and dryer on cement blocks at least 12 inches above the projected flood elevation. Relocate furniture, valuables, and important documents to a safe place, and develop a family emergency plan. FloodSmart.gov is the official site of the National Flood Insurance Program. This site provides further information regarding flooding and flood risks, the NFIP, residential coverage, commercial coverage, preparation and recovery. Additional resources available at FloodSmart.gov include an agent site, an agent locator, file your claim, frequently asked questions, get involved with FloodSmart, a glossary, flood facts, media resources, and toolkits. The What Would Flooding Cost Me tool is a tool where the user can estimate the cost of flooding on FloodSmart.gov for either a 1,000 square foot or 2,000 square foot house. The Kentucky Division of Water provides information regarding floodplain management and flood insurance on its website, including floodplain compliance, such as floodplain construction forms, flooding information, map modernization information, risk map information, and NFIP information. For more information, please consult the resources on the slide. This concludes our learning module on the National Flood Insurance Program.